Attack New York 2020. Just a year ago, we all gathered here at the host of Calcalist and CTEC to celebrate Israel innovation in New York. We gathered physically at the conference room, meeting all the new friends, talking about technology physically. And so much has changed since that conference. COVID-19 of 2020 changed the way that we do innovation, the way we do business, and also the way we do conferences. So now virtually we meet to celebrate again the Israeli innovation ecosystem and the interaction with the tech scene and the tech hub of New York. But what have changed? If at the beginning of 2020 everybody was still speculating how COVID-19 would affect our life, I think we've learned that it changed our life in ways that we could not have imagined. First of all, it accelerated dramatically digital transformation processes in society. Businesses that were fully physical, like shops, like companies that had physical spaces you need to go to, governments that were physical and analog by large, and also a lot of the services that we had, like the academy, the university, that were all physical, needed to change at COVID-19 times. And we saw something which is amazing for us looking at digital transformation, how fast they accelerated the transformation. So government changed services that for a long time were provided in the office that they needed to come and get a service to a fully digital service. Metrics around the world show that government became digital. Businesses at the same time that never had delivery facilities or any services outside of the shop needed to come up with a solution fast, how they can actually address their clients digitally. And many of them in weeks' times, became fully digital. At the same time, services that were always analog and always physical, like cultural events, like classrooms, all needed to become digital. And many of them had to transform very fast to meet the demand. So what we saw is an acceleration of innovation, an acceleration of adaptation of technology that was already here, but we haven't adapted as fast before. But the digital acceleration and the digital transformation of many businesses also left many behind. That's what we call the digital divide. And the widening gap between those who are digital and those who are not. Those who are ready with the infrastructure, with the data, with the methodologies to become digital, and those who are not. And that widening gap creates a real challenge for the economy and a real challenge for policymakers. How to deal with the businesses who were left behind, or with the individuals that their skills or education are not as tuned to the new society. But it goes beyond technology and it goes beyond economy. It goes to the individual. Think of ourselves, we're a different persona now. In just 9 months, we changed many of the interactions we used to have as physical interactions in our life. We studied together, we socialized together, we went to cultural events together, we certainly met our family physically, and all of that now becoming as a digital experience. And how it changed us as a persona. When you accumulate knowledge, when you socialize, when you study, when you sell, when you work, all remotely. And I think a lot of these challenges are yet to be researched, and we don't have all the answers. In the conference today, we're going to talk a little bit about this digital acceleration and digital transformation at the time of COVID-19. We'll talk a little bit about the investments, the innovation, the trends that we recognize in the COVID-19 time, and more important, how we think we, as investors and entrepreneurs, should rethink of our economy, of our industry at this time. We'll start sector by sector in this industry investigating the change. We'll start with the retail. Retail certainly changed dramatically at the COVID-19 when shop closed and needed to go to be more digital and more interacting in different ways with their customers. For that, it will be exciting to talk with Walmart and also with Echo, an Israeli company that changed the interaction with the store. So for that, I want to invite Hagar Avet from Calcalist for a conversation with Jenny Whiteside, who is the Chief Customer Officer for Walmart, and Yoni Bloch, who is the co-founder and CEO of Echo. Agar?
Thank you, Nimrod. Janie and Yoni, thank you for joining us today.
Hi.
Thank you.
So let's start with telling our viewers that maybe aren't that familiar with your joint project. Walmart and Echo as a very interesting joint venture going on together. Janie, maybe if you can start by describing it.
Sure. So we're super excited to be able to work with Echo, who help us bring interactive content to our customer that just basically makes shopping at Walmart fun. Whether you're doing that online or increasingly whether you're going to do that in the store, but you want to do something different. Echo helps us do that through their interactive content. And we are really on a journey to try and change the relationship that retailers can have with their customers. And so it goes from being transactional to much more emotional and fun, and we can play a much bigger role in people's lives, helping give them information and content and access to things that they wouldn't always be able to get, and do that in a really fun and engaging way for the whole family. And so Yoni and the Echo team are helping us do that as we think about developing new and different ways to engage with customers.
Yoni, anything you wish to add describing this project?
It's been a very interesting adventure for us. Walmart is not necessarily famous as a retailer in Israel because they won't open a store here. But in the US and most of the world, they're like by far the largest retailer, much bigger than people I think would understand here. And as such, they have a lot of interesting insights and historical customer relationships that we feel very lucky to join Walmart in this specific joint venture exactly at the time when they are transitioning and transforming and disrupting into something that is much less based only on their physical locations, but also about how to take all the experiences and the things they've done for so long in physical locations and bring it to the internet. And if you think about it, that when e-commerce started, because it was started by new companies, it's not about how fun could it be to go to shopping. It's about the grid of things you see when you know that what you want to buy. And Walmart was never just about that. And so for us to use, choice-driven entertainment to actually bring that inspiration to life and things like that with a company like Walmart is very exciting.
So just to make it clear for our viewers that aren't familiar with this joint venture, we are talking about content and short video programs and videos that people can shop through them as well as consume this content. And this is not only, we're talking about a specific joint venture between you two, but this is not only this joint venture. This is, it seems to me, a new level when it comes to e-commerce and retail. Most of us are still getting used to the concept of e-commerce and shopping online. You're offering something that is on a completely new level, isn't it?
Yes, I think so. If you think about one of the things that physical retailers, always tried to do was tell the story of their product. And in the past, you would tell that story by going into the store and seeing it and touching it and feeling it and playing with it and, and experiencing the joy of the product. Increasingly, as people are getting used to e-commerce, you have to find new ways of doing that. Just looking at a picture of a Lego online is not tremendously exciting. Being able to open the box of that Lego and build it online and see what the pieces are and understand it and, see how that might fit into the shelf in your room and do all of that through choice-driven content is really important as we think about the next generation of telling stories. And if you can do that even more by offering people more choice, suggestions, engaging that with celebrities or influencers who they're really interested in, and so they want to know which Lego somebody might choose or which gene they might choose or can guide you through that journey, then we know that that's more interesting and exciting than flat images of products for people.
You guys are pioneer in these fields, but do you expect this type of interactive shopping to take over e-commerce as a whole?
I mean, I think in the long run, yeah. I mean, I would like to think that it will become the standard at some point because, so you'll get to a point where each week you are looking for, inspiration. I mean, the whole notion of inspiration and discovery that we used to do by physically going to the shopping mall or going to the store is being replaced by by content. And I really think this is going to be the future of how everybody shops.
Yanni, what do you think? Is this the future of e-commerce?
Yeah, so I think it happens today already. Like, we have to find inspiration of what we want to buy first. It just doesn't happen on the e-commerce store. It doesn't matter if it's Amazon or others. Amazon, who's one of the biggest e-commerce websites, they won't tell you that, but like 99% of what you do on it is search for something. It's actually, first of all, a search engine. I know that I want this specific model and I'm going to buy it from there because it's comfortable and great. But this has become table stakes. Walmart actually gives you 2-day free shipping without being a subscriber. There's like other things you get. That's not what the fight is about anymore. And so the fight became like I'm watching influencers on TikTok or Instagram that will tell me what I should buy. Or I personally call my mom to ask her to tell me which clothes to buy. Or I watch YouTube unboxing videos of toys to decide what to buy for my kids. But those things are all made by different interests and incentives of different companies that want to sell advertising and want to be driven by the brand's needs, not by the customer needs. This is where Walmart is so, it's not weird, it's amazing, but they actually, in the end, as a retailer that sells everything, they care about the customer being happy with what they bought, not wanting to return it, not if you buy Coke or Pepsi, they don't mind. You should buy what's better for you. So when Walmart suddenly gets into the game of like, tell me a little bit about yourself, and I'll tell you, I have a lot of experience of people buying and like what they like and what they don't. And if we start wrapping that up with things that are exciting and fun for the customer, then Walmart actually is very uniquely positioned to be the one that will inspire you because their incentives are right. They want you to actually be happy with your purchase, not for you to be happy with your purchase of a specific brand. So for example, we're doing this interactive show starring Jamie Oliver, and it's an interactive cooking show, and he goes through different recipes that you choose what you want to make, and he helps you make it healthier, which is fun and cool. But also like when he, there's a moment where he asks you like, do you have a wok to make this specific dish? And if you say no, he'll make it with a pan. But if you say yes, he's the one that decides which wok he thinks is the best, not Walmart, not a specific brand. It's not about that being paid. And that, to me, is unique in terms of especially this new generation of kids, or now no longer kids, who want to feel that it's like authentic and true and not paid for. And so there's something really cool about like being able to, from a customer perspective, Jamie Oliver is now helping me and knows what, if I'm vegan or not, and how many people I'm cooking for and things like that. I'm not just watching a random cooking show that's made for everybody. And then on the other side, I don't need to put ads because I don't need to sell you something that you don't want. I'm selling you only things that are relevant to how you're watching the content.
Okay, so this joint venture has been going on for a few months, right?
So we've started by launching a camp in the beginning.
In the summer,
yeah, and that was because that was actually Janie's, personally Janie's genius. She and I both lived in New York, and we saw like this is going to be a hard few months with the kids stuck at home, and that it's not going to go away as quickly as everybody hoped. And we realized that camp is going to be, again, I don't think in Israel, camp is not the same as in America, but in the US, like camp is getting rid of the kids for 2 months for the parents. It's amazing. And suddenly you don't have that. And you don't have that, like, you want to be able to not just spend time with them, but spend time with them that is like worthy time, that you'll feel good about what you're doing. And so, Jenny, you can tell more about it, but it's been really like
so my question for you, Jenny, is having done this for a few months, what new tools have you acquired and what new knowledge have you acquired about your customers, about yourself? What have you seen from this project?
So, a great question. I think, look, what we're trying to learn is what is the most interesting and engaging content for our customers. Where do they want us to help guide them? So, we talked about camp, which was really about parents at home with their kids trying to balance working and dealing with the pandemic and having kids at home. And we learned a lot, around, do they want to learn about crafts or health or food or how to do, outdoor activities or indoor activities. And so that's allowed us to then think about this next iteration of camp. Who do they want? Do they want advice from LeBron James, from sports, or do they want, advice from different sorts of people? We know that health and nutrition and cooking are incredibly important, particularly now as more people than ever are having to cook more meals, bake more items than they ever needed to do, just because of the nature of where we are. And so we're just really learning what resonates most, what do customers like the most, and then to Yoni's point, where are people really looking for inspiration on the one hand, so ideas, but then where are they looking for people to help guide their choices? So lots of people didn't have a wok in their house, and you probably didn't need a wok in your house. Chances are, personally, I do have a wok in my house now because I'm trying to think of new healthy ways to get my kids to eat vegetables and things at lunchtime when they used to have their meals at school at lunchtime. And so it's about really learning how can we build the best content that people want to engage in, that gives them more choices. And to Yoni's point, for us at Walmart, I don't care which wok you buy. I just want you to buy a wok, and I would really like you to feel really great about that wok. And then the vegetables you're buying, you keep coming back, and we can help give you more and more ways to be able to, to use that.
Okay, so last question because our time is up. You've been fortunate enough to launch this project during COVID, but we are fortunate enough right now to hear about a possible vaccine for COVID. And in a post-COVID world, how will people's shopping experience be? Will it stay mostly online, or do you think people really miss the physical experience and going back to shop in person?
I personally think we'll see a bit of both. I think, we're seeing it. So right now in the US, we're hitting peak shopping season. So, it's the traditional Black Friday and Thanksgiving sales. Here's what we're seeing. People want to buy online and either have it delivered or pick up. And so they want to do they want to do the inspiration, they want to discover, and then they want to be able to go get it as easily as possible. I think for really big purchases, people are still going to want to go and see things. But for the mundane, for the food, the groceries, the things that you buy every day, batteries and light bulbs. And I don't know that anybody enjoys going out to buy batteries, right? Or light bulbs or, or bread or milk. I think that will become more convenient. And then people will be looking for, I think there'll be some physical discovery for bigger purchases where you want to go out and touch it and feel it and compare it. But I still think that will be post-education that will come, or discovery that will come online.
Thank you so much for you guys. It's been fascinating, and I look forward to experience this kind of shopping myself, hopefully soon in Israel. Thank you so much for your time.
Thank you.
Bye.
Bye.
Thank you. Nimrod, back to you.
In the last few years, cybersecurity was at the core of the interest of many of the Israeli investors. We want to look whether something changed with the appetite for cyber investments at the COVID-19 time, and whether changes in the trends of attacks and the way that actually hackers exploiting our evolving digital economy has changed the kind of solutions investors are looking for. For that, I want to invite Meir Orbach from Calcalist for a conversation with Mtt Ny, who is the CEO of Transmit Security and cybersecurity investor, and Rakesh Lonkar, who is the president and co-founder of Transmit Security. Meir?
Thank you, Nimrod. Hello, Rakesh, and hello, Miki. How are you today?
Doing great.
It's great to meet both of you here, the legendary cyber innovators and entrepreneurs. I believe that you have at least dozens of exits between you two and a few companies that you started together. Mickey, tell me a bit about what you are doing nowadays together and the new company you are behind now.
Together, always together. So we started a new company. It's been, I think, 6 years now. And it's in the space of identity and access management. And basically, we're helping enterprises to address 3 opportunities in this market. The first is around what we call identity portability. So you look at businesses, they have more and more applications and channels, and their customers have more devices and browsers all the time. So how do you register the customer's identity once and then authenticate the customer the same way across all these channels, applications, and devices? And the second opportunity we're helping them with is around infrequent users. So part of your customer base visits your applications often, but you also have a certain part of your customer base that doesn't visit your application that often. So perhaps once a quarter or even less. And these customers don't remember their password and sometimes don't even remember that they have an account. And their devices are not registered. So they're forced to go through all sorts of reset processes that are both unfriendly, but also prone to account takeover attacks. And the third is around what we call usable security, which is how do you leverage the new standards and technologies for biometrics in the right way that you build both security and also make it highly convenient for your customers to authenticate. Now, usable security is actually something that is applicable to both your customers and employees. So we offer that solution across the enterprise to all users, whether they're employees or customers of the organization.
Great.
We're about 200 employees. About half of them are here in Israel. We operate globally. And among our customers are probably the biggest financial institutions and the biggest merchants around the world.
Amazing. Rakesh, do you think that COVID-19 was some kind of blessing to the cybersecurity? A big surprise, some kind of what I can call a happy accident? Suddenly everybody's investing in cyber. Suddenly you see big unicorns in cyber, things you never saw before the COVID-19?
Well, certainly COVID was a bad thing for anybody who became sick. But anything that is digital became very, very big, and certainly for cyber, it helped accelerate the business. So we're of course happy about that.
Do you believe that these things are going to stay? Because there are things that only were good for COVID-19. When the COVID-19 will be over, now we see a vaccination in the way. People will start forgetting the cyber and these things are here to stay. Working from home and advanced security protocols. What do you think about it?
I think you break it into 3 parts. The first is that even with the vaccinations, it's going to take 2 years to vaccinate the world's population, maybe even 3 years. So we have this COVID world even with the vaccination. The second is that the vaccination may not work for everybody. So because you may have COVID that goes to animals, changes, and then comes back to humans in different forms. And the third is that even for the population that isn't affected by COVID or may be vaccinated, certainly work from home is a very big trend, and it's going to change the way we work.
Mickey, don't you feel that we are a bit exaggerating in the investment in cyber? We sometimes believe that it's multi-billion dollars are getting inside, and not all the companies, we believe, deserve these valuations, especially, and these amounts of money.
First of all, I think if you look at the companies that I've been seeing for the past, let's say 2 or 3 years, I would say that about more than half of them are trying to develop a solution that is not really needed. I'm seeing perhaps more than 75% of them of startups in cybersecurity that are developing something they don't know how to sell. And I would say that probably 90% of them are just copying their ideas from someone else who just got funding. So we definitely see inflation in the amount of cybersecurity startups, definitely in Israel, but globally. Alongside that, there are a few that are very, very promising with great teams and great ideas, and they will definitely be successful.
Do you believe that we are going to see any areas that are going to flourish, like working from home is the one thing, but there are other things that we are going to see that flourish in the cybersecurity in the COVID-19 era?
If you look at kind of like the career path that Rakesh and I have taken, so it's really to follow the weakest link of cybersecurity. So this is the weakest link is how attackers would compromise you. So it used to be network security 20 years ago. It then became endpoint security about 10 years ago, and now it's definitely around identity and access and all aspects of identity and access. Whether it's for employees and customers, enterprises are building more applications to offer more services and better services to their customers, and the identity and access aspects of these applications are extremely important. And on the employee side, we're seeing. I can tell you about ourselves as a relatively small organization. We're consuming around 150 SaaS applications today, and this would probably grow to 200 SaaS applications by early next year. So just managing all that in terms of identity and access management, that's a big trend, and probably I would call it the next big thing in cybersecurity. It's definitely identity.
Rakesh, you sit far away from us and you invest a lot in Israeli companies. Do you think there's differences between cybersecurity companies here in Israel and where you are staying in the States?
Well, first, the quality of the cyber entrepreneurs from Israel are just outstanding. And so I think that's, the first thing. We see some of the best cyber technologists from Israel. However, the go-to-market expertise in the United States is second to none. And the executives in the United States really know how to scale companies beyond even the aspirations of the Israeli entrepreneurs. And that's the only message I would have to every Israeli entrepreneur is think really big. Don't just start a company to flip it within 2 or 3 years. This is the biggest problem that we see.
You think Israelis sell their companies sometimes too soon, or inspire to sell their companies too soon?
Yes, they want to sell it too soon so they can tell mommy that they were successful.
But some of these companies were sold too soon for, let's say, $100 million or $200 million. Sometimes people say they don't have really future much more than this. Don't you think so?
I think a lot of these companies were much bigger than the entrepreneurs knew or expected. And the scope and scale of the global markets and the demand for these products is much bigger than most people understand. And if you're a first-time entrepreneur in Israel, sometimes you don't have those data points. You just don't know. So you make a decision in a silo without that information, without that data. And a lot about being an entrepreneur is a leap of faith in what you do is really, really big. And I think this is absolutely true for a lot of the companies that have been sold much too early. Because
in the States, they can see companies like Palo Alto or companies like Facebook and Google, and they can see very far. And in Israel, you don't see so many huge companies. The horizon is much closer here in Israel about these companies.
I think that's true, and I think the entrepreneurs are younger, so they're trying to mitigate their risk. But I think that you'll see a lot of very, very large companies from Israel, in Israel, if people sold a little later.
Okay. Last questions for both of you. What do you think we'll see in the next year or so regarding cyber? Do you think the boom will continue, or we'll start seeing some kind of relaxation, you know, focusing on companies and not investing so much money?
I think we'll see a few trends. So first of all, just in terms of cyber attacks themselves, I think we're going to see a significant increase over the next few years. I think that technology is offering attackers, criminals, a lot of tools that they can leverage in a very interesting ways. And just because businesses are growing and growing very fast, they're not always putting the technologies, the controls they need to put in to secure their businesses. So that's one thing we'll see. In terms of investments in cybersecurity, I think we'll continue to see a lot of investments, a lot of new companies, a lot of interesting ideas. I think there is a culture here in Israel that we're all exposed to of building better, bigger, more interesting cybersecurity startups. This is one of the key markets here in Israel in terms of just entrepreneurships. And lastly, I do think we'll start seeing bigger companies here in Israel. It's also like building the culture. It's a relatively new culture here. And the way that it's being built is that people are looking at their friends or someone else who did something else in this space here in Israel. And the bigger it becomes and the more successful companies we're seeing, and there are companies today in valuations of north of $1 billion, there are unicorns here in cybersecurity. We'll see more and more of these and more people who want to be like these in the future.
Rakesh, last remark?
Cyber is going to be an amazing opportunity for the next 100 years. And I think Israel is going to continue to be a leader in a segment. I don't think it's an opportunity just for the next 2 or 3 years, but definitely for the next 100 years.
Amazing, Rakesh. Amazing, Miki. Thank you very much. It was very inspiring. Thank you very much, both of you.
Thank you.
Back to you, Nimrod.
We seem to believe that artificial intelligence can solve all problems in our life. It can predict a disease before we have it. It probably can rank better how capable we are of returning a loan. We believe that artificial intelligence probably will help us in a better security solutions in our streets. We do believe that artificial intelligence is mature enough to handle many of the challenges we have in contemporary society. So no surprise that investors are looking at artificial intelligence and applied artificial intelligence solutions in niche domains as a very attractive investment domain. To discuss artificial intelligence investments, we'll have with us Ron Friedman from CTEC for a conversation with Apurv Saxena, who is the Global Head of AI Technology and Managing Director at JP Morgan, and Tal Slobodkin, who is a Managing Partner at Stage 1 Ventures. Ron?
Thanks very much, Nimrod. Now, to hear more about artificial intelligence and its impact on various industries, we're joined by two men with their finger on the pulse on the forefront of artificial intelligence and its use in finance, banking, etc. With me in the studio now is Tal Slobodkin. Welcome. He's the managing partner at Stage 1 Ventures. And joining us all the way from Silicon Valley in California is Apurv Saxena. He's the managing director, global head of AI at JP Morgan. Apurv, thanks for joining us too.
Thank you. Thank you for having me.
Now, just to get us started, so our viewers are kind of familiar with who you are and what you do, can you just start by describing what it is you do at your company and how it ties into artificial intelligence? We're going to start with you on that one, Apurv.
Thank you. Thanks for having me. I'm Apurv Saxena. I'm Global Head of AI for JP Morgan. In this role, I lead a team of data scientists, engineers building AI applications and technology stack for next generation AI applications within the financial services industry for JP Morgan. I've been in this role for almost 2 years now. Before that, I spent 6 years at Google building Google Cloud AI vertical solutions. So I've been in the industry and I've been more building horizontal applications, and within JP Morgan now building more of a vertical solutions.
All right, excellent. And Tal, you're here with us in Tel Aviv. Can you tell us about your role at Stage 1?
Sure. So I'm the managing partner of Stage 1 Venture. It's an Israeli-based VC. I've been doing this in the past 7 years. Before that, I was the head of investments and acquisition for Cisco here in Israel for 6 years. And before that, business school in the US and about a decade in the Israeli army.
All right, so we've gotten to know our guests a bit. Let's get into the meat of things. Now, artificial intelligence, it's a very common term in our industry. You know, as somebody who reads, you know, articles and press releases and announcements, you can't escape it. But let's try to put some flesh on those bones. And starting with you, Apoorv, what is it that JP Morgan does in relation to artificial intelligence? What kind of activities, what kind of projects are you working on?
So this comes right from the top. Jamie Dimon, who is the CEO, fundamentally believes that AI is going to transform how financial services are run in the next few years. And this is not something that JP Morgan started in the last 2 years. They have been working on AI and machine learning and analytics for some time now. What they are doing is fundamentally scaling up that application. So we started off last few years in what the very bread and butter use cases of AI in customer engagement, customer service, better targeting of customers and personalization of ads and so on and so forth. But in the last few years, we have invested in fundamentally looking at how AI transformed a core business, a financial services application. So think about how can we use AI to do better asset pricing. So bond pricing is one example. How can we use AI to better inform portfolio allocation decisions? How can portfolio managers use AI from both get insights from alternative data to make better decisions, so on and so forth. So I think it's fundamentally transform AI, financial services using AI is what we are going towards.
Fantastic. Now, when it comes to you, Tal, you know, you're constantly looking at startups, early stage companies. When it comes to AI in particular, what is it you're on the lookout for?
Yeah, great question. So we have seen an amazing amount of companies doing AI here in Israel in the past few years. And I think when we look at this both horizontally, as in what are those interesting technologies that can be used across many, many different sectors, but also vertically. What are those vertical specific AI solutions like AI for healthcare, AI for retail, AI for salespeople, and then try to dig and see what are those big problems that we can help companies solve.
So it kind of brings us to the next stage where we've got, on one hand, a giant company, a bank like JP Morgan, on the other hand, a venture capital firm that looks at technology companies at various stages. Do those two worlds combine? Do those two worlds mix? I mean, let's start with you, Apoorv. I mean, when JP Morgan looks at new technology or cutting edge innovation in the field of AI, do you prefer to do that in-house, or do you, you know, are you looking to shop around for those technologies where they're available outside the company?
So we have taken a hybrid approach. We fundamentally believe that there are some core pieces of the technology which are highly proprietary. They have to be built in-house. But a lot of the technology stack, especially in AI, is getting increasingly easy to source and easy to build on. So our approach there is to directly work with vendors, big companies and small companies, and especially within AI, a lot of startups that we work with, to build our technology stack. So we do have a program where we know, like, especially if you're a small startup working with a big bank, it can be intimidating. And we understand that. So what we have done is in the last few years, build our early stage technology program where we directly source and work with very early stage companies, some even in pre-Series A, and all the way to slightly more Series B, Series C companies where we work with them, collaborate with them, co-develop the solution that we need and tailor it to our needs, and then invest in them in some cases as well. So, and we just had, like, last week, what we call Silicon Valley Tech Symposium, where Jamie, in fact, came all the way, is personally involved in meeting with all the early stage startups that we have been investing and working with. So we have a huge focus area towards that. It's just not big companies that we work with.
Right. Interesting. Now, from your perspective, Tal, you know, you've got portfolio companies that are in the field of AI. Have you had companies that have, you know, kind of made that shift into larger businesses or larger companies? Sure.
So at stage one, we invest in very, very early stages. Most of our companies get their first funding from us. So it's really how you engage with the market and how you get your first customer that makes the big impact on the success of the companies. And we urge those companies to go forward and try to reach out to the potential customers as soon as they can. Now, for a small startup with 2 founders and a dog or 5 first employees, it's very hard to go to the big companies out there and succeed. And we're trying to help them as much as we can. I think one example worth mentioning, we had a company called Apprente that was focused on conversational AI for quick service restaurants. So to make that engine that helps you order food when you're in the drive-through or when you're in the store, and do this using AI versus a person out there. And luckily, the company was able to go and interact with a few of the top 10 quick service restaurants out there, including McDonald's.
Wow.
And ended up...
Doesn't get much bigger than that.
Yeah, ended up doing a big pilot with them and eventually being acquired by them as they were seeing the potential of the technology for the company in-house.
Fantastic. Now, kind of maybe taking this a step backwards, a bigger picture. When we're talking about artificial intelligence, like we said at the beginning, it's kind of a buzzword. It exists everywhere. But as much as it's an opportunity, and we see it as a tool for improving life with the aid of algorithms and machine learning and things like that, there's also some trepidation. Apoorv, maybe you can kind of address that issue. Are there or should there be stops in place to kind of keep an eye on that technology that doesn't get out of control?
No, that's a great question. And this is something that we live with, especially because JP Morgan is a regulated industry. And the models that we use for our trading operations or our loan financing operations or our asset pricing operation, a lot of those models are regulated. And so we are increasingly working closely with the regulators in defining, because all of this is pretty new even for the regulators to understand. So as we are increasingly sort of, AI goes from the periphery more into the core financial services industry, that scrutiny and that the regulatory guidelines and monitoring will only increase. And this is where we are investing heavily. And so the good thing is the startup community has taken that opportunity in stride. So we are working with quite a few startups within this space around AI explainability, for example, or bias detection is another example in models, so that we closely work with them. They are bringing the cutting edge work on this area. We also have partnered with research universities because a lot of work in this area is still in the research phase. So we work with them directly and incorporate that into our products.
And Tal, I guess last question for you. In order to provide the knowledge, the know-how to keep this industry up and running and active, we require some kind of infrastructure, whether it's knowledge, academia, capital, obviously. Is that something that you're seeing take root here in Israel? Yeah, absolutely. I think the last few years you've seen a great rise in AI startups here in Israel, and it's been amazing to see how companies are being founded. And you're absolutely right, there are great ties both with the industry but also with academia. Apoorv just mentioned explainability as an area. You keep on seeing interesting research done by professors in different universities in Israel being spun out of the university and becoming great and interesting startups, and we've been following those. And I think there's also a great capital inflow into those markets, understanding that there's a big impact to be done on the industry. And Apoorv, you also have activities here in Israel, right?
Yes, we see Israel and Tel Aviv especially as one of the core areas where we are investing not only broadly in technology, but especially in AI, ML, because we believe Tel Aviv has an amazing ecosystem of startups which are bringing a lot of interesting work within the AI field. And so we partner not only with startups there and looking to partner even more, but also universities there. So I think it's a key part of our strategy and key part of our technology strategy to be involved and deeply embedded in the Israeli ecosystem.
So thank you both, gentlemen, for this great conversation. Tal Slobodkin here with me in the studio, and Apoorv Saxena in Silicon Valley. It's been a pleasure talking to you. I'm going to throw it back to the studio and to Nimrod.
Thank you. Investors seem to change their appetite. If for a while investors were focusing on early stage investments, and we saw more and more funds focusing on new startups, on small teams, coming with a new idea, a new team, Now we see investors much more focusing on later stage startups. A lot of the capital is now being invested in much later companies, later stage, and in companies which are more mature. That's created a challenge for cyber entrepreneurs, but also created a dilemma for cyber investors. What domains should they focus at when there's an appetite for later stage companies? For that, I want to invite for a conversation Sophie Schulman from Calcalist to talk with Derek Zanuto, who is the general partner at Capital G, and Evgeny Dibrov, who is the co-founder and CEO at Army Security. Sophie?
Thank you, Nimrod, and hello to Derek and Evgeny.
Hi, Sophie, good to see you.
Great to be here.
Thank you for joining this e-meeting, transatlantic e-meeting, and we meeting these days, historical days of major changes with the new president-elect in the USA, and also amazing data on COVID-19 vaccine from Pfizer, and we'll discuss all of this new data coming in. And I would like to start with you, Derek. We saw following the data from Pfizer that tech stocks took a huge dive with people thinking that we are going back to our old lives. And I would like to hear from you if you think that it could affect also the valuations in the private tech sector. We saw huge mega deals, higher valuations, especially in SaaS companies. How do you think it will change, if it will?
Absolutely. Yeah, no, obviously incredibly exciting news from Pfizer yesterday. And I think what the biggest impact yesterday with the vaccine announcement was that it gave investors increasing confidence around the shape of the economic recovery that's likely to occur, where previously there was this debate, will this be an L-shaped recovery, a V-shaped recovery, a U, maybe a W, pick your favorite letter. And I think with yesterday's vaccine announcement, there's an increasing view among many investors in the public markets that this could look much more like a V-shaped recovery coming out of end of this year and into next year. And so I think as a result of that, you'll continue to see those valuation multiples expand, not just in the public markets as we've seen today, but also in the private markets. And it's funny, it's actually a bigger secular shift in valuations across all of software and SaaS companies specifically that's happening in the private markets and public markets today, driven by three big drivers in my mind. One being the record low interest rates, the second being a record amount of dry powder in the private markets, and then third is a shift among VCs and growth investors increasingly toward TAM-based investing, or investing that really puts a primary focus on how big is the addressable market, and leaves less scrutiny around current business fundamentals, because there's a belief that if you invest in the right market and it's big enough, you can make a ton of money, irrespective of current business momentum. So I think those three factors are driving a lot of the heady valuations you're seeing today in the private markets as well.
And the second major change is the election of Mr. Joe Biden for the presidency. How do you think his policy will affect the tech sector? Do you think the regulation will change, the taxation will change?
Yeah, it's a good question. I think there are a few areas to watch with respect to a Biden administration. The first, as you said, is taxes. He obviously campaigned on a platform that emphasized tax increases on both individuals and corporations. And so I'd expect he will work to enact policy changes along those lines. Obviously on taxation, if the Republicans maintain control of the Senate, which is still an open question, then Biden's degrees of freedom to make those changes will be muted. So we'll have to see how all that plays out. The second big area, I think, is immigration. I would expect to see the Biden administration undo Trump's executive orders and take the U.S. back to where it was under the Obama administration, which I think many American businesses would welcome as it relates to easing current restrictions on H-1B visas.
From that point,
for many of the companies.
Yeah, from that point, I would like to turn to Evgeny and to ask you, as a foreign citizen working in the U.S. in the high tech, how important is to lift this ban that Mr. Trump applied on the immigration visas? How it's important to the high tech industry?
Yeah, so it's a great question, Sophie. So I think that especially in the pre-COVID times, it was crucial. I mean, myself and Nadir, my co-founder and CTO, we've been in the US since almost the beginning of the company in mid-late 2016. And it's so important to be close to customers, close to the business, especially as the founders. And I think that in the COVID era, it's a bit less important because you can be on Zoom from any place in the world. But I think that we've seen some good news from the Pfizer vaccine, and hopefully I really can't, I'm really waiting to be normal a bit, at some normal again, when face-to-face with customers, especially in early stages, mid stages for the company, when it's so important to the trust of the first customers. It's very important to be face-to-face, to be close to the business, to be close to the business teams. So in my perspective, always founders, especially in the first 2, 3, 4 years, must be in the US, North America as their top priority market, and be there physically in presence. And the visas are definitely very important for that.
I would like to continue on that point on the small startups, early stage startups, and start with you, Evgeny, and then turn to Derek also for answer for that question. As I mentioned before, we recently see mostly mega deals, late stage funding, and we see less and less since COVID-19, less and less early stage and seed funding. How serious, Evgeny, in your opinion, is this problem, and what the early stage companies can do to attract more funds?
Yeah, so you are correct, Sophie, and I've been also seeing more, I would say, the growth type investments and larger seed rounds. I think that as a founder of a company, and what I would also say to many good friends that are asking for advice these days, is really to focus from early on product market fit, and focus a lot on listening to customers, to their needs from the very beginning, in order to have, I would say, less pivots during the company journey. And I would also say that there should be even more focus on adjusting to the new environment, adjusting to digital transformation trends, adjusting to what works in this new environment. Even, I mean, the digital transformation, it was accelerated. It won't be stopped, even if we go back to like the normal.
Thanks, Evgeny. Derek, how do you see that? There is less and less capital going to the early stage. In a couple of years, you might want to invest in late stage companies, but there will be less deal flow since they won't survive.
Yeah, it's a good question. You know, I think that there's been, I don't know if I'd say it's more late stage versus early stage. I think what I'm seeing more today is there are companies that can thrive in a remote work from home environment, and then others that will have more of an interim hiccup along the way as sort of norms adjust within the enterprise. And I think that bifurcation is driving a bit of the funding dynamics that we might be seeing both in the early and later stages. And so I think for the earlier stage businesses, those that can create a narrative around how they can help companies better compete and thrive in a remote environment, like companies in the collaboration space, and as an example, have continued to see record amounts of capital and valuation multiples expand there. I think other companies that don't have those same dynamics are seeing a bit more chopped currently and on a short-term basis. So I think, you know, one dynamic I'd flag for entrepreneurs that are thinking about raising capital in today's environment is that, you know, investors have a whole new set of questions to ask entrepreneurs today than they had called a year or two ago, to think about how these businesses can thrive in a remote environment. The first, as an example, in go-to-market, you know, can the product be sold with an inside sales team, or do you need more traditional field reps in a room with the buyer to land a deal? Product, can the product be deployed completely remotely? Can you onboard and train employees on how best to use the solution so time to value doesn't suffer and you can continue driving net dollar retention up? You know, can you keep your sales team motivated and happy in a remote environment? And then finally on team, you know, how does a leadership team communicate with each other and the broader organization in the current environment? Things like frequency and transparency of communication are all the more important in the world we live in today. So I think that sort of questioning is something that is probably a different line of questioning than entrepreneurs would have had a year or two ago.
Great, and now I would like to talk a little bit about the cyber industry. Evgeny, we saw from the beginning of the COVID-19 crisis lots of hype around the cyber companies, cybersecurity, but it's not really translated to revenues in every segment. Would you share with us what are the best subsectors in cybersecurity these days? And is it better to be a small company with a cheap solution than a big gorilla and the old gorilla in this market?
Yeah, so I think it's really about the adjustment to this new environment. As I said before, you look at the companies that have, even larger companies that have solutions that are really positioned well into this environment. I think that look at Capital G invested in a couple of the larger ones like Zscaler and Okta that are doing really well, even as public companies, because they are very well positioned to the work from home and for the remote access use cases and solving those. I think that what we've seen a lot at Armis as well, that we're seeing so many assets that are not just in the specific building, but going at home, or assets moving in the cloud, and the asset management problem to have one central asset inventory is becoming bigger and bigger. You have more assets, digital transformation making them more unmanaged and unmanageable. And this is becoming even a bigger problem, and we are seeing that a lot. I would add that as an innovative company, startup, I would say, not just startups, but a company that also knows to adjust itself, it's really important these days, because if you have things that are changing so rapidly and the product must adjust and launch new capabilities, new features super fast in these environments, and companies that will know to adjust to it will be able to succeed and grow super fast even during the pandemic days.
Thank you very much. Thanks, guys, for your insightful things, and I hope next time we talk, it will be on the other side of the COVID-19 crisis. Thank you very much.
Thank you, Sophie.
Thank you very much.
Back to you, Nimrod.
Thank you. Public markets seem to surprise everybody. Experts thought that at the time of COVID-19, probably also would affect the public markets. We thought that with an economic recession and seeing an impact on the economic capabilities of the individuals would also affect the public market. But surprisingly, public markets are at the all-time high. At the same time, we could have thought that investors would be a little bit more cautious about investing in new companies at a time of uncertainty. But IPOs seem to be again at all-time highs. More and more companies, including Israeli companies, are now aiming at going for initial public offering at the public markets. It takes experts to understand the finance of this time and how public markets seem to operate in our contemporary society. So for that, I want to have Dina Paskaraz, who is a partner and head of technology at KPMG Somechaikin, for a conversation with Shlomi Chagai, who is the global CFO of Content Square.
Thank you, Nimrod. What an extraordinary year it has been for all of us. In the next 10 minutes, we are going to discuss the exponential rise of online, well, everything, as a direct consequence of a global spreading pandemic, and the surprising flaming trend of 2020, or rather the second half of it, IPOs and SPACs. I'm more than delighted to have this talk with Shlomi Chagai, Global Group CFO of Content Square, that successfully completed a $190 million Series D round in March with giant tech VCs like BlackRock Private Equity. Shlomi has been an active CEO and CFO in different tech companies over the last 20 years and has led various M&A and IPO processes, including ClickTail Content Square merger in June 2019. I'm sure he will share with us crucial insights today. Hi, Shlomi, and thank you for taking the time. Crazy year, huh?
Yes, crazy year, but it's just more than a year. It's basically the last 2 years. It all started with the turnaround when I was leading ClickTail, the first investment of KKR in Israel. It was something like a year in which we made this company fundable and worked on the turnaround of the company. And this is something that basically led us to the mid of 2019 when we finalized the acquisition of ClickTel by Content Square. It was an acquisition and a merger of two businesses with lots of common, with lots of things that we managed together. Since then, we worked on the integration of two companies. One of them is Israeli, which is very global, and the other one is a French company, which is very global. And after 12 months of this integration, we started a fundraising that we basically started in the beginning of 2020. And it's something...
Sensitive timing.
Yeah, lots of sensitive timing. And I think it was something like close to 2 months before we felt like COVID is coming. Everything was finalized by April 2020, when we managed to raise 190 million fresh money from BlackRock. And since then, we are working towards the next, I would say, activities of the company that might lead the company to an IPO.
We'll get to it later. Content Square is a leading experience analytic platform that analyzes digital behavior in order to provide the world's most powerful brands insight. What's your perspective on the effect of COVID-19 on online businesses?
Definitely, the effect is very positive. The online business or the digital business of the online is increasing very rapidly over the COVID period. We see lots of transaction coming from most of our enterprise website that we are working on. We see lots of sector, all this sector is just booming, and we see lots of sectors that are increasing and are monetizing the website very successfully. Of course, some of the sectors like travels and exhibition and tourism are still under hold, but definitely everything is very positive. We also see an increase which is correlated to the transaction in the hosting and in the cloud and all the expenses around. Mm-hmm. And we also see some campaigns. Every year we see the campaigns toward the Black Friday, toward the Cyber Monday. This year we see lots of preparation because of the increase, because of the very positive atmosphere around. So we see all of our enterprises, customers preparing themselves for the next campaign towards these events. And I think that, all over, we see that, the next years to come, more and more SMBs are getting there. And more,
small businesses.
Small businesses. I can give you one example of the winery next to my house. It has something like 3 stores. I used to buy my wine over there, of course, inline in the stores. And there is a shift in which all these SMBs started generating the online stores in which they deliver directly to the customers the goods.
The physical stores are closed, so everything is moving online.
Yes, definitely.
So I'm going to come back to the hint you threw. So what's the next step for Content Square? IPO? Are you looking at IPO? This is like the big buzzword.
So in the company size right now, and after the last years of growth, yeah, we are going there. I believe that although we started IPO readiness process in the company and the investor really believe in it, but for Content Square, IPO is not a goal. It's just a mean in order to achieve its targets.
And if we hold on just a moment on your last comment, from your perspective and your experience, you have vast experience in the high-tech industry, what are the business metrics or the financial insights that highlights that make an IPO successful? What would you put the main focus? Because there are a lot of tech companies today that are looking on the possibility of an IPO. What's your take on that?
So since there were many IPOs recently, and there is lots of statistics about IPO, so today I can include it, or I can summarize it in 2 aspects. One of them is the SaaS KPIs, in which a company should monitor in order to make sure that the company is ready for an IPO. And we can talk about ARR, we can talk about the net retention, CAC, Rule 40, cost of acquisition, Rule 40, magic number, and many things that most of the financial CFOs are there and they need to monitor it.
But this is for the SaaS industry. In general, not all tech companies are SaaS. So.
Yeah, so generally, not for SaaS, I think that companies should make sure that the revenue is growing in the right rate for 1 year to another. The EBITDA definitely is something. And today, a company should be on top of its financial highlights in order to make sure that once it's pushed the button and go for the NASDAQ or for any other stock exchange, the company is ready from all of the financial aspects.
Okay, I think we all walked into 2020 with the expectation that it's going to be a robust IPO year. And then, the ultimate black swan arrived, COVID-19, and I think we all adjusted our forecasts. Then some large IPO came out, like Lemonade and JFrog, and suddenly the market started to open up, and today we see a floodgates of IPO, and like everyone is talking about it. What's your take on this? What's driving this mega trend?
I think that, we see this in the last few years, and by the way, this is something that the industry is very, I would say, interested in. Although COVID is around, we see that all of the stock exchange are increasing, and there are lots. There is a huge boom over there. From the investor point of view, there is lots of money. They have money and they are going to invest. The interest is very low. They are moving to equity. They prefer to get into equity. I would say that less real estate, but more on equity. And I think that the big winner of all of this is the tech market, the tech sector. From the technical point of view, from the company side, from the tech companies, so one of the things is that, it's easier to get there because there are more and more interest around IPOs. I can see this around the bankers that I'm speaking to. Second thing, the valuation are very, very, very high. You can see the JFrog one, you can see the other one. I think that most of the IPO were very successful. And so companies believe in it, companies want to get there. And I think that, the situation right now, while both sides are very much focused on it, this is the big advantage.
But we mentioned JFrog and Lemonade. These are relatively more mature companies. But today, I think we see more and more earlier stage companies, even sometimes pre-revenue companies that are going to IPO. Does it make sense? If assuming the market allows it, so to speak?
So if I compare these days to about 20 years ago, when there were small companies going there, and the requirements were much lower. Today, the requirements are still higher. You need to have the financial ratio that I mentioned before in order to get there. But still, if small companies really consider going there, and I'm not against this, they need to consider the following. First of all, there are lots of costs which are related for doing the IPO, also for maintaining a public company. And the second thing, there is lots of distraction among the management, among the board, among all of the structure where the company is right now in order to be ready for this. So I think that in the end of the day, there is an opportunity, but a company, smaller company that wants to go there needs to consider all the aspects that are around.
It's a shift basically from a certain state of mind of a very lean, agile company to something much heavier and more regulated, corporate governance, etc. It's a mind shift. Sometimes when I speak to companies, I have the feeling that they think that the IPO, it's a one-off event and then they just can come back to their old way of doing business. But it's a big shift, right?
Yeah, it's a big shift, and companies that go there, the main thing is not only to do the IPO. The main thing is to be traded later, right? The liquidity of the company and to make sure that the valuation of the company. So company needs to be ready to make this big shift. And once they are ready, they need to go there, and to go there the faster they can.
What we hear today from the other side, from the investor side, the institutional investors, is that it enables them to invest, that they are looking for higher yield returns, and this enables them to basically participate at the game at an earlier stage, not just arrive at a very late and mature, and basically optimize and maximize their value and basically bet or gamble on the technology sector, which, as you mentioned, is clearly the big winner of this COVID-19.
Yeah, indeed. And this is something that, in the end of the day, it's not only regular IPO, but also SPAC. It's not only the traditional IPO. Today we hear more and more about SPAC and about this vehicle. What is your opinion about this, Dina?
Over the last few months, I think it's it's accelerating very, very quickly. I think that SPAC is basically an instrument. It's another way. It's the back door to being traded, whether it's on the New York Stock Exchange or the Nasdaq. We see stronger sponsors that are basically forming a SPAC, which is a special purpose acquisition company. They form the SPAC. They go and raise money from the public without any operating business. With the commitment, their commitment to the investors is to find a good investment within the next 24 months, within the next 2 years, and it enables institutionals and let's say investors that are not VC investors with specific expertise in the tech market to basically put their money on the strong sponsor. Bill Ackman, the hedge fund wizard, lately managed to raise $4 billion to a SPAC in order to find like an interesting unicorn that still has some room to grow. So the SPAC enables the institutional and the investors to basically enter the game at an earlier stage. And on the other hand, it enables the tech companies an easier way into the market. They don't have to work on a prospectus. They don't have to prepare a business model, explain their business model. It's relevant especially to biotech companies and some companies in the autonomous car industry. So this is a very innovative way. And today, basically, companies have 3 ways of becoming public. Classic IPO, still the traditional. Second is the SPAC, and thirdly, for a company that doesn't look to raise money, they can just be list themselves without the prospectus. So we have 3 ways. So really a hectic year. Shlomi, what's your forecast for 2021?
So, forecasting next year, I think it will be very hard to.
Nobody would do it right in his right mind.
Yes, but, things looks very good. And the environment, the ecosystem looks very good. I wouldn't forecast anything, but I would say that we need to keep with the same momentum in order to achieve the goals for next year.
Careful optimism. I wish us both a more traditional, ordinary, and calm year for the year to come, for 2021. Thank you, Shlomi. It was a pleasure, as always.
Thank you, Dina.
And now back to you, Nimrod.
Thank you. Wow, what a great day we had at Mind Attack New York 2020. I think we had an exciting discussion today around innovation, digital transformation, and investment at this time. But stay with us. Stay with us. We have another exciting day coming up tomorrow, talking about cybersecurity, risks, and opportunities at this time. So Mind Attack New York 2020. Meet you tomorrow.